You heard the Nigerian petroleum minister talking about $10 extra for Brent because of the power crisis, gas prices. What do you guys see?
Well, it depends on what kind of winter you have. I mean, our main view is if you have a one standard deviation event, we're somewhere around $5 a barrel. But I think the big theme here is this whole idea of BTU convergence. You have shortages in coal, shortages in gas. We still don't have a shortage in oil because you're still drawing the inventories. But if you have an uptick in winter demand, we think that could add 600,000 barrels per day of demand. Then you have the oil demand itself, another 300. It's another potential million barrels per day of demand, which then you force oil in line with the rest of the energy complex. But I want to emphasize, you looked at the inventory numbers. It's just a continuation of everything we've seen since June of last year. Only thing that's changed over the course of the last, say, 12 to 18 months is the risk profile. Let's go back to July and August. We went down, dipped down to 65. Delta risk around demand, OPEC and Iranian supply coming on, U.S. shale drilling picking up. Now, what has changed? All three of those have reversed. Now we have a potential for gas pushing demand higher. When we look at OPEC, they've disappointed. Iran's probably taken off the table right now. And you have the Gulf of Mexico disruption. So you put it all together, all the risk is shifted to the upside. So we stick to our $80 target with potential risk $5, maybe even $10 higher than that, depending on what kind of winter weather we get.
Here in the UK, there is a growing expectation, Jeff, that energy prices, gas prices in particular, are going to stay higher for longer. I appreciate what you're saying about the weather, and it does look as if the weather is going to play a huge factor here. But nevertheless, the expectation, Kwasi Kwarteng, the business secretary, was talking about this earlier in the House of Commons. We need to get used to higher gas prices. Is that your view as well?
Oh, absolutely, yes, particularly outside of the U.S. When we look at LNG, it's the type of demand that we have coming out of China, creating a tight global gas market. Combine that with disruptions in Russian supply going into Europe, low inventories, strong demand coming from substitution away from coal, given the emphasis around climate change. Yes, these are with us to stay, and I think the issue is, the supply chains are so severely depleted, the system cannot accommodate any type of disruption. And it's those types of, small disruptions in supply, stronger than expected demand that sends prices to $22 an MMBTU, as we saw about a week ago.
What's interesting, though, that prices still aren't high enough to divert flows from Asia into Europe. What's the price shift when we either see big demand destruction or when we see big shifts in where the cargoes are going?
Well, when we talk about demand destruction, just substitution you're talking about is the first line of demand destruction. In fact, I like to point out oil is the cheapest thing on your screen right now. So when we think about the type of demand destruction is, hey, we need to get more gas. We're going to get it through using oil, which we don't want to use because obviously it creates more emissions, require more carbon credits to do it. But I think that's your first line of demand destruction. To get to the actual demand destruction, we're talking far higher prices because when we talk about heating demand and gas demand, it's the most inelastic demand out there.
Demand destruction on one side, but is this going to does this slow or accelerate the energy transition?
The higher prices should accelerate it. The question is, what kind of backlash do you get from the public, or what kind of backlash do you get from policymakers? But the bottom line, higher prices do nothing but make renewables and other types of alternative energy look far more attractive. And I think that that's really, in one way, you have the EU environmental directive cheerleading higher carbon prices, but this is the consequences of higher carbon prices, that it does speed up this process, making coal more expensive, wanting to consume more gas in a really tight market, just creating and reinforcing this dynamic.